Hello, we are Team Secret. Today we will be doing the Accounting Presentation Challenge 2016. We will be using 7-Eleven Malaysia Holdings Berhad as our company of interest. We will use the financial reports of 2014 and 2015 to discuss the various performance ratios of the business. Each slide will consist of 3 scopes. First, we will find the performance ratio for 2014 and 2015. Second, we will be comparing the two ratios, and last, we will provide strategies for improvement. These are the various types of performance ratio that will be discussed. They are profitability ratio, efficiency ratio, liquidity, and the stability of the business. Profitability is the ability of a business to earn a profit. Firstly, the gross profit ratio in 2015 has a slight improvement of 2% compared to 2014. Reasons of increase may due to 7-Eleven increase the markup on the stock sold. Giving more discounts would improve this ratio. The return on sales ratio has deteriorated by 0.54% in 2015. Reasons might be due to higher expenses incurred in the year 2015 compared to 2014. Reduce the expenses would improve this ratio. Next, the asset turnover ratio. In 2014, for every dollar of assets, there is a sales of $2.55, while in 2015, there is a sales of $2.72 for every dollar of assets. This improvement may due to the businesses using the assets more efficiently to generate sales. The owner investment in 2015 is slightly deteriorated by $36 compared to 2014. In year 2015, the return on assets ratio has deteriorated by 1.6%, leading to a lesser profit of $0.08 for every dollar of assets. To improve both ratios, the business should make full use of its assets and owner investments to generate more profits. Efficiency is a ratio that is used to analyze how well a company uses its assets and liabilities. In 2014, it takes around 42 days to sell off the stocks but 49 days in 2015. Comparing the 2 years, it takes around 7 more days to sell off the stocks in 2015 compared to 2014. Cash cycle shows the time taken for the business to turn stock into sales then to cash. In 2014, the business cash cycle is around 42 days, while in 2015, it is 59 days. This shows that the cash cycle has deteriorated by 17 days in 2015. Business should find a cheaper source but also maintaining the quality of it. Debtor turnover. The debtors in 2014 takes around 1 days to clear off their debts but 11 days in 2015. The business is not efficient in collecting debts from debtor in 2015 compared to 2014. It takes 261 days to settle off the debts in 2014, while it takes 254 days in 2015. The cash flow ratio is 51 times in 2014 while it is 22 times in 2015. The cash flow ratio has worsened in 2015 compared to 2014 by 29 times. Business should give more discounts to encourage debtors to pay earlier. Moving on to the liquidity ratios. Liquidity is a measure of ability of a business to pay their debts as and when they fall due. Overall, the working capital ratio has deteriorated by 26% in 2015. This shows that the business has liquidity problems as there is not enough current assets to pay for current liabilities as they fall due. The business should pay the liability as fast as possible to improve the ratio. Next, the quick asset ratio. The quick asset ratio has improved by 26% in 2015, but still they may not be able to pay for it when the current liabilities fall due. This can be improved by using long-term loan. Lastly, stability is the ability of the business to pay long-term obligation as they fall due. Let's start off with the gearing ratio. In 2014, for every dollar of assets, it is financed by $0.65 of liabilities. In 2015, for every dollar of assets, it is financed by $0.75 of liabilities. The improvement of gearing ratio by $0.10 may be due to the business relying more on borrowed funds such as bank loan. Ratio can be improved by utilizing the assets more efficiently to earn revenue. Lastly, the debt-equity ratio. There is an improvement in the ratio by $1.24 in 2015 compared to 2014. Among the strategies that can be employed are increasing sales profitability, better management of inventory and restructuring of debts. Overall, the business profits has deteriorated in the year 2015. From the decrease in trends from 2014 to 2015, we know that 7-Eleven is not a profitable company for businessmen to invest in, as generally it can be said that there will be slight losses. Thank you and hope you have a better understanding in business performance.